Welcome to another episode of the Dentology podcast, where we discuss the business of dentistry. In this podcast series, we'll be discussing all the non-clinical aspects of dentistry, from goodwill values, finance, marketing, how to buy and sell a dental practice mindset, through to where you can invest your money in team management issues. My name is Andy Acton, and I'm joined by my co-host, Chris Strevens. Let's jump straight into it. Welcome to another episode of Dentology, the Business of Dentistry podcast. And today we're joined by Julie-Ann. Hi, Julie-Ann. How are you?
Hello, I'm very well, thank you.
Good. Super.
Hi, Julie-Ann. Good to see you.
Thank you for having me.
No, not at all. So obviously you specialise in arranging mortgages, and I know from personal experience that you're incredibly good at it. But before we get into the whole mortgage side of things and you know what you do and how you go about it and some tips and tricks for people if they need to arrange a mortgage, what's your background? What was your pathway through to mortgages?
Well, it's quite a winding path, I suppose. So I had a background in pizzas, a couple of
a background in pizzas.
Of all the things that you were going to say, I didn't expect to hear a background in pizzas.
No, that's okay.
Yes, well, my parents had a takeaway, so I was selling pizzas at age 8, silver service waitressing. Working in retail, selling a Walkman to Freddie Starr. I didn't get any famous people really.
To Freddie Starr.
I've sold a 9 foot by 9 foot mattress to Fat Boy Slim. It obviously didn't help, did it?
No. Sadly not for him.
No.
There's got to be some joke about one of his songs, but I don't know them very well. So.
No, sorry, I missed that one. But I met my husband 25 years ago. We've been together now, and he distracted me from going to university. So we instead went off and qualified as scuba diving instructors and worked abroad. And then when I returned, I wanted to do have a career where I qualified. So it was either hearing aid audiology or mortgage advising. And obviously the route's clear. I took I worked a year employed and then have been self-employed ever after that.
Well, that is a windy path, isn't it? But what was interesting, you obviously deliver exceptional customer service and you always go over and above. And for me, it's interesting that you ended up kind of delivering service, albeit, pizzas when you were 8 years old from a very young age. And I wonder kind of how that influenced you in terms of how you saw service and what service means to you, because that's a very strong part of who you are.
Yeah, that's true, actually. I think it's come from my upbringing because both my parents were self-employed. So there's been holiday flats where I've helped with changeovers my father was a hearing aid audiologist. That's why I've contemplated that path, but both been self-employed and always appreciated that when you're selling something, you want to be on the journey with the client and you want you're accomplishing something for them. And even when I was selling mattresses, as jokey as that sounds, it was the NASA Temper mattress. So it actually improved the way people sleep and gave them a better quality of life. I don't know how pizzas help people's quality of life, but
honestly, the fulfillment you get from having a nice pizza, there's a chance.
As long as it hasn't got pineapple on, because that's just a no-no. Pineapple on
the
a
Hawaiian.
pizza.
The Hawaiian, that's a Hawaiian, isn't it?
Work.
I think pineapple and ham, that's a Hawaiian, yeah. Not a very popular choice.
No.
Yeah, I think they always put it on the menu as a decoy to draw you towards the nice stuff.
Yeah, no, that's right. Yeah. But it's good service though, isn't it? It's that thing, I suppose. It's that classic thing as a service is experienced as well as purchased.
Yeah, right. But I think very much it's for me, I enjoy being on the journey with the client and achieving and working towards the end goal rather than certainly mortgages. You are on the journey and they're making the biggest purchase of their life, so it's quite roller coaster.
But we were talking to somebody else in another episode about the service that they deliver being life changing, and yours is as well, because you do your job well and you enable them to get the money to move into their dream home or change to a property that's nearer their children's school or whatever it might be. it's really big stuff. And okay, you can say, well, it's just effectively a house loan, but it's so much more than that, because where people live, that kind of determines so much about their life, doesn't it?
Yes, certainly. And I think it can be quite, you can really see people's pain when I've got first-time buyers at the moment, they're on their fifth offer, and they're first-time buyers, mortgage is arranged in principle, and they keep having the excitement of finding a property and then having this massive fall when their offers declined, or if people are gazumped or they lose a purchase or there's just some problem. So in trying to plan as carefully as possible, we try and make the mortgage journey as easy and smooth as it can be.
So over the years, have you kind of developed almost like counselling techniques in those situations? Because I assume when people come to you, they're a bit crestfallen and lost that property didn't go through. So do you have to kind of buoy them back up to keep them going?
I wouldn't call it so much counselling, but certainly, and I feel their disappointment for them. And if there's any extra tips I can give them to put them in a stronger position for their next offer, then we certainly do that. And every time you hear somebody that's had their offer declined, you're learning something else, another perhaps tactic or a tip that you could give to your to the next buyers to say, thought about presenting it this way. And I suppose sometimes I draft the emails for the clients to send to estate agents as well, just to try and make it as strong as possible.
Sure. I was going to say, do you do a bit of coaching almost that sort of says this is the, when you meet the seller, make sure you do this or say this and be positive, and when you talk to the estate agent, make sure you bring out these sort of positives about your offer, because obviously your experience is vast in comparison to someone who's just buying a house for maybe the first, second or third time, because a lot of people don't move much, do they?
Well, that's true, but the people that are experienced are still finding it hard because there's so much competition for properties at the moment. I mean, it's really not unusual to have 4 or 5 offers at the same time, and I think even experienced buyers are sort of taken back by that, because you expect if you're in a really strong position that your offer's going to be taken. So yes, if we can add some strength or advice for how to present, then we certainly do that. And I think one of the things I've been doing for quite a long time is to perhaps not show that you're so keen on the property, and maybe to play it off with another one, because the estate agents are obviously working for the seller, aren't they, rather than the buyer? So we're definitely on the buyer's team.
And when you're helping people arrange mortgages, does it basically always just come down to the rate? Is it just about getting the lowest rate possible, or are there other factors and elements that you would consider when helping somebody?
Well, this might surprise you, but I never recommend the lowest rates. And this is because you may have seen some headlines lately about sort of 1% interest rates again, because they've just hit the low, which is fantastic. But those products are likely to be with the biggest deposit, but also a high fee. So if you're borrowing 100,000, it's not going to be cost effective to get the lowest rate with the highest fee. So I always present mortgages in order of total cost over the product period. So that takes into account the borrowing, the rates, and all the fees and cashbacks.
Is that? I was going to say, is that quite a challenge sometimes, because people just focus on, I want the cheapest. I want the cheap. Is that the same? Yeah. I imagine that must be quite hard, because people say, well, no, I want 1%. I don't care. And then when you have to explain to them the reason behind it, I imagine that can be quite tricky sometimes.
Well, initially in conversation, I might say, I do say to people that I will tell them that this is the most cost effective. But then when we finalise the proposal, I don't just provide the source and results to evidence where the recommendation is, but I'll also provide the evidence as to if we're recommending the third on the list, why the first 2 weren't suitable. So really actually providing the evidence rather than just telling them. And I do that because when I first bought a property, I didn't go with the first mortgage advisor and went off and did it myself, because they just recommended Santander, and I felt I didn't trust. Why are they telling me only Santander, not telling me about anybody else?
I was going to say to you, Julie-Ann, does that happen with other mortgage brokers then, that they will either just sell you the cheapest because they think that's what people want to hear, or they'll just sell you like a big brand name because that's the only ones either they deal with or the only ones that they feel that they should introduce you? How does that sort of work?
Well, other brokers do our whole of market, but they may have a panel of lenders, which is restricted, whereas we are completely independent. So apart from the very few lenders who don't allow lending via intermediary channel, we are completely independent across the UK of lenders.
So even a mortgage broker they could say they're whole of market, but they're not really because they're still working with a panel. Is that sort of how it works?
Panel is the definition of whole of market.
But just a panel, not everybody.
Not the same as independent. So
yeah, that's fascinating. That is really interesting.
It's a subtle difference, but quite an important one.
Yeah, it could be a real key one, couldn't it? The fact of...
Well, and also I'm thinking about, obviously, this is Dentology and it's the business of dentistry. So primarily the people that listen to this podcast are dentists or people involved in dentistry. And quite often their situations can be, not conventional, slightly complex. And so having access to a wider market, I guess, is important because you might need to access some lenders who aren't necessarily the obvious high street names, but they're the people that have packages that would suit that kind of demographic and that type of client. Would that be the case?
Certainly, yes. I mean, we are, even this week, we've registered with 2 other lenders that we haven't used. Well, I say they haven't used before. We have used one of them before, but it's about finding the most cost effective that meets the criteria as well. So you really can have the extreme of one lender will lend 100,000, another lender will lend 350. So
can the extremes be that broad?
They absolutely can. So the majority of lenders for self-employed lend against an average of salary and dividends for company directors. So you may have salary and dividends of 25,000, for example, certainly in in the very early years, if you're not taking the money out of the business. But we have a handful of lenders who will lend against salary and share of profit, and that might be profit before or after tax. They might take an average of 2 years, or they might take the latest year. So that has a huge.
That's a massive variance, isn't it? If you do it that way, suddenly you could be affording something that you never thought you'd be able to afford, because it's quite often, I'm assuming, Julie-Ann, it's quite often not the actual repayment that's the issue. It's actually what you can borrow is the stumbling block because of how they assess the criteria.
That's right, and of course we are loyal. So if as people, so if we have banked with NatWest for 25 years, we think that going to see NatWest or making an appointment with them, that they're going to treat us the best. But of course, it's only one lender's criteria. So just seeing any broker is the best way to go. Money Supermarket, obviously, there's no way of actually looking at the criteria on there. So.
Some of the things you described, Julie-Ann, are these the sorts of things, and this isn't kind of, I'm not trying to talk you out of work at all, I just don't know the answer to it. Are these the sort of deals and lenders and information that I could find myself as an individual person, or are these sort of products and packages that are only available through brokers?
It's not so much about the packages, but more about the criteria.
Right.
We've arranged many mortgages for clients who are who want to buy their first practice, and they need some money from their home to use as the deposit to get a better deal on commercial finance. And capital raising on your residential mortgage for business purposes is pretty much a decline across the board, and the reason is because residential lending is regulated and business lending isn't, because you're deemed you should seek professional advice. So we have one bespoke avenue that we've been arranging for years for FTA finance clients, where we can capital raise sort of from low as just over 1%. I think it's 1.25% at the moment for a 2-year fixed. with perhaps 25% deposit, something like that.
So just playing that back to you. So if somebody wanted to buy a dental practice, they could take equity out of their house using a particular mortgage that would create the cash deposit so they could buy a dental practice.
Yes, so we do it as a residential remortgage.
But only certain lenders, by the sounds of things.
One lender, and it's outside policy, and so they always get declined, but we always turn it around, and it's completely above board. We've put many cases through. It's just a very bespoke avenue that we can face with, and it's very competitive.
And that's why, I mean, if nothing else, then you've got to use a mortgage broker, haven't you? Because no one else will have access to that type of facility or that type of relationship. If there's nothing else that anyone listens to, then that's got to be one of the sort of a key one that says through your relationships and experience, you create a service and product that basically isn't there otherwise.
That's right. Yes. And it doesn't just happen with business lending. It happens with like bespoke buy-to-let mortgages as well, because buy-to-let mortgages have the way you calculate lending is a stress rate. So they might calculate, they want to see how much the amount of rent will generate the maximum loan for the buy-to-let purchase or remortgage. If that doesn't fit across the board, we can look at top slicing against the income, so we can do affordability models. And there's probably maybe 5 to 10 lenders in the UK that do that. But again, we're talking about competitive rates. It's just about actually knowing where to go with it.
And you're not going to find them on Money Supermarket, are you?
No. And also, I guess it changes. We were talking to somebody in another episode about arranging commercial finance, and he was saying that, banks' policies change all the time. So sometimes they're particularly keen for a particular type of business, and then their policy changes and they're not so keen. So then he would then look to use other lenders. And I imagine you find it something similar on the residential mortgage side, that different lenders and different institutions are better in certain areas than others. So I guess for self-employed people with complex situations, who you would go to for those. Yet for perhaps a straightforward someone who's employed, they're a first-time buyer, they might suit a different sort of lender. So it's kind of a matching service.
Yes, yeah, absolutely. And in terms of how to package the case and how the underwriters are going to be most favourable at looking at it, what you need to support it, because it's far better to actually approach a case with the right packaging than an underwriter keep coming back.
And what's the process that people have to go through? Because one of the things you hear quite a lot is people talk about an agreement in principle, and that's obviously that fits within a process. So what does it kind of look like end from end, from when somebody contacts you to getting a kind of a formal loan offer and then they can buy their property?
Okay, so that the first thing is that we really like to see all the documents that would support a mortgage application. So be it their income documents, that might involve getting some from the accountant, bank statements, normally 3 months. More often than not now, if you're self-employed, lenders are going to want to see the business bank statements, so we'd have a look over those as well. Credit reports, which we can provide links to be able to download those for free. And that gives us a very complete overview of exactly what balances are outstanding. The credit record, everybody, or many people will just know that they have a clean credit record and it's fine. But the reason to have it is because it gives us the exact details on the commitments are outstanding. And then I can actually assess it as though I was the underwriter, to see where we might potentially have any questions raised or anything we need to iron out now before we take it any further. And having that, I can very accurately forecast how much people can borrow, and obviously we can then bring the rates in so they know how much it's going to cost as well. An agreement in principle is something that you apply for with one particular lender. So the big downside of gaining an agreement in principle is that the best, most competitive mortgage today might be different in a couple of days' time or next week, and you then have to do another credit check, which if you're at high loan to value, 90 or 95%, it could then cause you to decline on the second application. So I'd much rather check the credit record and the affordability models, because then I can be as certain as an agreement principle.
Well,
really.
so you're saying that if someone had a high loan to value mortgage with an agreement in principle, and then reasonably shortly did another one with another credit check, that could end up being a decline.
It could do, yeah. So you might have a credit score of 990 and think you've got a great score, but lenders all have their own scoring system for those high loan to value mortgages, and multiple credit checks can have an impact on your credit profile.
Wow. Oh, that's a real one. That's another one to learn about, isn't it? I wouldn't even have thought about that, but because you would have thought, it's just an agreement in principle. But the fact of you could do that and then potentially jeopardise your another if you're not careful, then that could cause problems.
And also by doing that, what it means as well is you're able to do lots of pre-qualification so that the people before, in fact, I don't think we'll have to do this again because Chris has got a call coming in.
No, it's not. I don't know what it is. It came up as Zoom notification.
But is your phone on silent?
No.
It's 4:00. So this was the time this was set
that's a
for.
Zoom notification. That's what it is.
Oh, right.
Anyway, going back where we were.
So where do we finish off?
Where was the last bit, Oliver? Can you remember?
We're talking about agreement principles.
Oh, agreement principle and could jeopardise your credit score.
Yes. So we'll pick it up from here. So in essence, doing that pre-work and making sure that you're aligning all their information and doing that assessment before you go too far prevents sending that information to the banks. Lots of searches happening because potentially if that was the path that you went down, that could damage their credit score. It
could at a high loan to value, yes. So we do have to be mindful of that, and especially at the moment because the government-backed mortgages, well, several of them were launched on the 19th of April, but we still don't have a full provision of those mortgages. So we have got a few clients at 95 that want to buy at 95%, and we're just holding off because we don't quite know yet who is going to be presenting the best mortgage for them.
It really does show, doesn't it, that whilst there are places like Money Supermarket, possibly for people with a very straightforward requirement, with a very low loan to value and a relatively small mortgage, that might work. But as soon as you stray off that path, it really is a minefield of things, and you can see why using a broker would make sense. I
suppose, especially with multiples and stuff like that. It's your comment of earlier on when you were talking about that one company does your salary plus average dividends, or the other one does a profit share. That can make a massive difference, but you won't know, will you? You'll have no idea if you've just gone to Money Supermarket.
No, that's absolutely right. Even for me, I'm still looking at criteria all the time. I can't profess to know the criteria for all lenders inside out. So the main thing is to start with the most cost effective and literally work down the list. And be able to evidence that as I go. So
there must be hundreds of mortgages out there, mustn't there? Must be hundreds.
Yeah, how many are there? How many people? I mean, this is a very hard question to answer, but how many people roughly lend for UK mortgages?
Well, I'm going to guess. I'm going to guess there must be around 100 lenders. I would guess.
Wow.
I have to admit, I haven't really looked at the number of lenders.
And then I guess every lender has different products and packages and services. So within that, it then just mushrooms in terms of the assessment of different services that they have to offer as well.
Well, really for me, we're looking at residential, buy-to-let as a limited company, and then some semi-commercial things. That's kind of the scope of my work.
Right, yeah. And has the obviously at the moment there's been a cessation of stamp duty, and with these new government mortgages coming in, has that stimulated the market? Is that partly the issue with multiple offers coming in on houses? Practices.
Well, there's not enough properties to meet demands. So although, and we're kind of nearing, we're pretty much this week, it's the last week to try and get it through by the end of June with zero stamp duty.
Yeah.
Obviously there's a 50% reduction between July and September, but when you actually have a look at the formula, it doesn't make much saving really. But there are still quite a lot of clients that still want to get it through for the end of June, but I think it's a really tall order because a standard purchase would take 3 months to go through, even without, with only a couple of people in the chain. So,
yeah, sure. And how do people contact you, Julie-Ann? If somebody wanted to contact you, is there a website or you're on social media? What's the best way to get in touch?
So the website can be found at ftamortgages.co.uk. It's always good. I think my mobile number, the office number is on there certainly, but I do like to have a conversation with people initially to get a good idea of what they're looking for, and just to be able to sort of make sure I'm not missing anything really. But we try and make it as easy as possible. We don't have long fact find appointments as clients want experience. They go to a bank directly. I really try to get all the information from the documents and then just find out a bit more about, just add a bit more substance to the case and the research by having a conversation up front, which normally we're looking at about 10, 15 minutes, something like that.
Right, yeah. Oh, it sounds good. So, yeah, like I say, it feels like old-fashioned service.
Yeah, well, I think we can both say, can't we, that you've done work for us and it's great service.
Yeah, no, absolutely. And we always finish by asking our guests 3 questions. So the first question we've got for you is, if you could meet anyone that you can just pick out the sky, anybody you want to meet, who would you like to meet?
Well, it's maybe a little bit sad for me, actually, because I would have liked to have met 3 of my grandparents. So I feel there's something missing from my heritage by having not met them. So that's news.
Oh, that's right. And I think the thing, well, it is. And I think what happens is as you start to get slightly older and kind of the older generations pass on, I think you do realise that once grandparents or great grandparents are gone, you kind of lose those first-hand stories.
Yeah, I was just checking you weren't going to look over at me when you said as you get older. I was just thinking normally there'd be a point where you would mention about my age, but I'm just looking to see you say
you lose, and if it isn't handed down, when those generations have gone, that information and knowledge goes with them.
That's right, and I think you certainly have a better appreciation for your parents once you have your own children, don't you? But
yes. And our second question is, if you could be the fly on the wall somewhere, so you're on the wall as a fly and you're looking down on a situation, what room would you be in? Where would you be? What would be a fascinating scenario for you to watch over?
I think I'd go back a year and listen in on the government meetings where they were advised by all the professionals on what steps to take, whether to go into lockdown, what to do, and to hear the for and against arguments from both sides, because I think we only hear a certain view of snapshots of it, so I'd like to hear a lot more of the full story from those meetings, and then I'd like to jump forward, be able to see forward and see where we are in a year's time, because who could have possibly forecast that we'd be in this position with the government being able to control everything that is happening in our lives.
Absolutely, yeah. And also the interesting part as well is, what's played out as they expected, what was different, and with that benefit of hindsight, what things could have taken a different path, and we'll never know because it was such a unique situation.
Should Cheltenham have gone ahead?
Well, exactly. Yeah. There were so many things that kind of did or didn't happen, but I genuinely believe that I think people, on the whole, try and make the best decisions possible. It's just whether they play out or not. But I agree that would be a fascinating room to sit in. And then the last one is you've got 2 people and you can swap jobs. So think of two individuals or 2 characters where you swap jobs. So something like we've got Boris Johnson and Keir Starmer. If they switched, how would they feel in one of those roles? So have you got 2 people you can think of?
Yes, well, I think the BBC News is far too dry and depressing, so I'd switch Hugh Edwards and Michael McIntyre.
That'd be interesting, wouldn't it? Yeah, Michael McIntyre reading the news.
Yeah, and I assume in their styles as well. So Michael McIntyre would make it very light-hearted and funny, and poor Hugh Edwards, who's quite a dour guy who does read the news, he's going to have to get some comedy genes in there somehow.
Well, he must have a funny side, so I'm going to give him the benefit of the doubt there.
No, I think you're right. That's been brilliant, Julie-Ann. We really appreciate your time today. That's been really useful. I think there's been loads of tips for people to take away as well.
Definitely, yeah.
Well, thank you very much for having me.
Lovely. Thank you very much.
Thanks,
Cheers,
Julie-Ann.
Cheers. Thank you for listening to this episode of Dentology, where we discuss the business of dentistry. If you like what you heard, please do subscribe where you found this episode. That would be amazing. And also follow us on Instagram.